Joining us right now to react to that latest economic data is former Fed Vice Chairman Richard Clarida. He is now Global Economic Advisor with PIMCO. Richard, your interpretation of what these numbers mean and how much of a surprise this comes as?
Not really much of a surprise, Becky. I do think the Q1 numbers were probably distorted by that huge surge in imports to front-run the tariffs, and I think could be revised up slightly. So the final number may be closer to zero. I do think probably that the Fed will probably try to look through this number because of those distortions. And as Steve mentioned, demand, at least on the consumer and capital spending, was pretty healthy. So maybe the headline number is a bit misleading this time.
I was going to say, you think this is an overreaction from the market if you're looking at futures selling off by over 300 points?
Not sure about that. There are a lot of things for futures to respond to. Perhaps maybe more the ADP number did come in, I think, softer. And obviously that is a leading indicator of what we'll get on Friday. But I think the GDP number came in about as I expected anyway, and probably distorted a bit by the trade.
So we're trying to get our head around how the Fed will look at all these numbers. I think your idea that these are distorted, the Fed will look through them, is pretty interesting. We heard from the president last night in Michigan, where he is putting additional pressure on Fed Chair Powell to lower rates once again. What would it take for you to think that the FOMC will start looking around and saying, hey, maybe this is a time to cut?
Well, Becky, that's the $64 billion question. My own view, based upon what they've said, and based upon the fact that inflation has obviously been above 2% for the last 4 years, is that I think that they're inclined, given the uncertainty, and also given the uncertainty about what the ultimate level of tariffs will be, to basically stay on hold. I think they've been clear that if they see tangible evidence that the economy is cracking, that unemployment's going up a lot, that we get a contraction in job growth, then they'll start to think about a cut. But I don't see them cutting based upon a forecast that the economy may slow in the second half of the year. I think they're going to need to see some hard data.
Remember the good old days when bad news was good news?
Yeah.
I mean, that would always work. That would always work because it means the Fed's going to cut. But they're backed into a corner, not only by inflation, but by Trump. By saying, you got to cut, I'm right, you got to cut. Now he can't cut. And so traders are watching this, and it's like, whoa, this would be a great time to say we need a cut, and bad news is good news, but we can't do it anymore. I miss those days, Rich. I'm ready for the Fed.
It's a good point, and I'll give you an example. During my time at the Fed in 2019, there was a trade war with China, and tariffs were in place, but there was a lot of trade policy uncertainty. The economy slowed. Inflation fell, so bad news, at least for the Fed. The economy slowed, and yet the Powell Fed did cut 75 basis points, but it was a much different situation because inflation was running below 2%, not above. So I think that's the main difference in this circumstance.
Oil's 59, and the last couple of prints on inflation were negative, or there was a negative one, and it was much softer. So
yeah.
We're assuming tariffs are going to cause inflation, or you're assuming that there's still some in the pipeline the Fed didn't take care of the first time?
I think we're on a glide path to 2%, but as even Governor Waller said recently, the progress on disinflation stalled late last year, even before tariffs. But I do agree with you. I think that in prior cycles, the Fed probably would be teeing up talk about a cut.
Good old
right
days.
here. Yeah.
Nothing could go wrong. Good news, it goes up. Bad news, you got the Fed.
Maybe bad news is bad news. Maybe that means good news is good news. We'll see.
Yeah, but we're not getting any.
Hold on.